Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are in Vancouver, and it's a beautiful day, and it's going to be the warmest one of the year so far.
Bob, we'll kick off the show with a question from Justin in Berkeley. Hi, Jim and Bob. Bob's been discussing our energy systems for quite some time. I think the main thrust of his argument is that fossil and nuclear and greener sources are all fine in the aggregate, but when government chooses a bad and good source of energy, that's when we get into problems. Currently, a bad pun, California is saturated with voltage during the day, which I think is great. At night, however, I think it's perfectly reasonable to use fossil or nuclear to keep the system running. I always thought it was silly to burn up a good resource like oil in an engine for no good reason, as it can be used for other great purposes, say pharmaceuticals. Does Bob think hybrid systems are the way to go, and what is his view of the newer nuclear technologies out there?
Yeah, thanks. It's a major issue now, and the fact that it's an issue is that government authoritarians have got involved, and they have ideas that are not economically or engineering-wise practical. Like they suddenly want all cars to be battery-powered. Well, and because there's no bad stuff coming out of a tailpipe. But just to build one of those things messes up the environment something awful. And then with lithium batteries, they have a tendency to blow up all on their own and they can burn for days. And of course the charging is a problem. If you were to have more and more people driving battery cars, a service station, instead of on the corner of a block, would probably take up half a block space. So it's all quite unreal. But the dreadful part is they have the authority to push a fad. But the EV fad peaked out last year and is in an appropriate decline because it wasn't the voluntary part became a fad and people went along with it, and it's now fading. So you can get practical. Now, as to alternative sources, or the most practical, is you want to have energy density. And the problem with battery cars is you got no density. And the energy with the greatest density, of course, is nuclear. And there's some wonderful modular nuclear electrical power plants coming along where they can be built. They don't take 15 years, and they can be built of a modest size, relatively close to where the power is consumed. And then, of course, you've got natural gas, which is an outstanding source of energy, and you've got oil. So the fossil fuel, coal included, they're building a new coal plant in China almost every other week. This is the real side of it. And as to running out of coal or natural gas or crude, that's sometime way down the line. And it was sort of like people in Europe and England running out of trees to chop down for firewood. They found something else, namely coal. So by the time you, I mean, how long can this last with coal and oil and natural gas for a very long time? So the best thing to do would be to just be practical, get the authoritarian monsters out of the equation, and enjoy your gasoline car.
One of the problems we have in British Columbia is that the power company is called BC Hydro, and they're obsessed with hydro. They don't look at tidal, and BC, because of Vancouver Island, has variable tides along the coast. There's a company in Richmond, BC that makes barges that generate power from the tide. You could put them all along the coast, park them in a river.
Yeah, wouldn't that be pretty?
Now, the only one
actually,
that's...
Jim, I hate to intrude, but they've been trying tidal devices. Maybe we get a 17-foot swing in the tides out here, and let the private sector develop it.
Yeah.
And if it's economic, they can go ahead with it, but keep government out of the equation.
We'll have more with Bob Hoye when we take a look at some interesting headlines coming up next.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at...
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines. The first one, traders stunned at the clueless Bank of Japan interventions. They don't have a clear handle on market positioning. Japan, negative interest rates. They've just gone back to zero.
Yeah, I like the criticism. It's valid. It's from possibly a trading desk, and the policymakers at the BOJ really don't know what they're doing. So, and negative interest rates are a problem because they're an interesting feature now. If you take long treasuries in the senior currency, real, that's adjusted by inflation. Real long rates go down in a bubble, the final year or so of a bubble, and then they go up. Now, people have been complaining about rising rates, and the increase so far has been 3 percentage points real. But in the typical post-bubble contraction, well, let's call it a depression, the real rate goes up by about 10 points. It's huge and devastating. So the market is doing what it should be doing on the way to a severe contraction.
Also, my comment or thought on negative interest rates, if they were so good, how come the ancient Chinese, the ancient Greeks, and the ancient Egyptians have negative interest rates? All brilliant civilizations, very profitable. They didn't think it was a good idea. Why would it be a good idea now?
Now, I haven't read in that detail what ancient Egyptians and ancient Chinese were thinking. I'm amazed that you were able to find that, Jim.
Well, they love to make money. And when things are negative, you just don't. You just don't. How do you... I know the idea was your money in the bank is worthless, so get out and spend it. But the Japanese are traditionally great savers, and they don't believe in banks because they've had so many fail. And most people have a safe at home under a floor or in a closet. They call it closet money. So banks don't count.
Yeah.
They still like to buy their car or washing machine with cash. Headline, Goldman explains why the Fed and Treasury are now both in full-blown stock market mode.
Oh, yeah, they like the apparent prosperity of a rising stock market. And actually, in the 1929 high, John Moody of Moody's, he had published an article outlining that with the new and scientific Fed, he actually used scientific, and with an elastic currency, meaning easy on the gold standard, there would be no recessions, therefore no bear markets. And then, of course, you got the crash. But there's evidence that the Fed was quite easy during the crash. And then you got the wonderful assessment by the Barron's editorial in July of 1932 that pointed out essentially that every anti-deflationary measure taken by the Fed is seen not to be working. And the anti-deflationary measures that the Fed was practicing was buying bonds out of the market. So there are people here who are expecting the central bankers to keep the bubble going. There's never been an example in history, and yet they have at times have been determined. So let's just review the Fed's history. That it was created at Christmas 1913, and the powers that be then knew that with you had a financial crisis, it'd be followed by a recession, and therefore, with the Fed as the lender of last resort, there would be no crisis, therefore no recessions. Presto, just like that. But the record shows there's been 18 cyclical recessions since 1914. It was just one recession would disprove the theory, but now you're out to 18. And so the common and still shared and at some points cherished theories about central banking just don't work. It's just doesn't work. So it's fascinating here. Well, soon, if the economy starts to slow down somewhere in the next few months, we'll soon see, the Fed will lower rates, and that'll make things wonderful. But if you take a chart of the 3-month Treasury bill and the S&P, you'll find that they go down up together and then they go down together. And at times on that chart, the fastest drops in T-bill yields will be associated with the fastest plunges in the S&P. So we're going to be going in the next few months into some interesting stories, Jim.
Bob, should the Fed keep interest rates where they are right now? Because, historically, this is about the level interest rates were at, 5 to 7%.
The Fed doesn't set interest rates.
Okay.
It follows. You got the T-bill rate set by jillions of transactions around the world each day, whether people buy something or not buy something or sell something or go to work, all feeds into the interest rate market, and it shows up. The best record on that is the interest rate market in the senior currency, which is the U.S. dollar. So, but no, the Fed follows the market forces. So this is where the whole thesis of being long the stock market, considering that the Fed is there to prevent them from going down, is totally wrong, and that's what that headline was dealing with.
Yes, so if the Fed is following the T-bill rate, why is so much attention paid to what the Fed says then? As all these financial reporters, just hang out, oh my God, the Fed's going to raise the rates.
No, Jim, it's a legend.
Okay. So is it a good idea for them or for rates to stay where they are, because doesn't that encourage more people to save for a rainy day?
Well, rates never stay where they are, Jim.
Yeah, of course not. But
now the high
in that
for
range.
The 3-month Treasury bill was set in August, and it's come down a little, but the downtrend has not been set yet. So this is why there will not be any Fed cut until the T-bill rate starts heading down, and that will be the sign that the recession is on. So falling interest rates is not a good thing.
Mm. And at their peak, I remember 1981, Canada savings bonds paid 21%.
Yeah.
And I scraped together every penny I could, sold paper clips, whatever. I said, we'll never see returns like this again.
Yeah. No, that was the historically in the senior currency, which used to be sterling, with the London being the financial center. So for at least 200 years before that, the high on their long-dated bonds was 6 or 6.5%. That was extreme. Like when in 1797, when England was threatened by an invasion by Napoleon and went into a panic and drove the yield up to, I think it was 6.5%. So no, to get out to, in the U.S., the senior currency, where the long bond traded at I think it was 14% yield, is extraordinary. Never, in the senior currency, never been that high. Certainly in lesser countries like banana republics, you would have high interest rates, but not in the senior currency. So it was an example of crazy intrusion by the state.
Headline: Are the Magnificent Seven stocks now unbeatable?
That's like the Fabulous 50 during in the 60s. That every fund manager, it was just a one-way decision. You bought the Fabulous 50, and nothing can go wrong until late 60s, and then boom. Now, one of the Fabulous 50s was Polaroid. Do you see Polaroid stock trading today? No. So some of the Magnificent Seven, maybe 20 years from now, may be just a has-been. But let's take a look at when you're at the stock market peak in 1929. It took until 1987 for prices to get back for the S&P to get back to that level. That's a long time to be waiting to break even. So anyways, markets are very powerful forces. Nothing lasts forever, and the way to take advantage of it, Jim, is if you got some history, you know where the changes in the markets are likely to occur. And then when you've got top technical for the overbought or oversold, then you can do the transaction. Hey, and this is, of course, what we have. We've got the historical part, and with Ross, we've got the ability to identify either the selling opportunity or the buying opportunity. I like it. It's a good system.
Bob, gold and the U.S. dollar are at very high levels. Traditionally, one usually is going up while the other goes down. Yeah. Why are they doing well together this time?
It's just the way it goes. Now, in a post-bubble contraction, which we're in, because the whole world peaked in 2022, the real price of gold goes up, which it has been doing. That's adjusted by CPI or adjusted by commodities. And also, at the same time, the senior currency firms. So we're getting, this is where the completely unexplainable. Now, we follow gold divided by commodities because commodities represent the cost of mining. And if commodities are falling relative to gold bullion price, then the cost of mining is weakening relative to the price, and the gold mining business gets very profitable. And indeed, if you look at all the past Great Depressions following a bubble, the gold miners have done well. Now, there's some near-term problems here is that gold stocks had a good, terrific rally out of last year, late last year, and then they will be vulnerable if you get some pressure in the stock market this fall. But so we will be able to advise on the next buy in gold stocks, but essentially it's early stages of a multi-year bull market for the sector. And there will be times when a gold index, such as the GDXJ stock index, will outperform the S&P. I mean, not just going up, but outperforming the S&P, which would be great. So the outlook on the long term for the gold sector is very good. It's a little precarious now because it's had a good run. So we will be able to advise on the next buy on golds. And then also we have our favorite short list of very good junior golds. As a portfolio of these things, the returns should be rather good.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and looking forward to getting together again next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@housestreet.com. Find us on X @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.